Hi, everyone. Welcome to the Real Vision Daily Briefing. It's Tuesday, May 10th, 2022. I'm Maggie Lake, and here with me today is Tommy Thornton, founder of Hedge Fund Telemetry. And we are also joined by Real Vision's own Ash Bennington, who's going to bring us up to date on some serious things happening in the world of crypto. So, Ash, let's start with you. So, we saw this news around Terra, the stablecoin UST, break its $1 peg. You were kind enough to sort of brief us and explain to some of us who aren't as deep in the crypto world as you are. So bring us up to date. I mean, it is an experimental coin, so maybe not on everybody's radar, but it does seem to be raising some big questions, including whether there's an impact on Bitcoin. So what do we need to be paying attention to here?
Yeah, that's exactly right, Maggie. Look, this story gets really complicated really fast. Let me try and break it down for you to get the essential points to understand. So there is a project called Terra, also called Luna by its symbol LUNA. There's a stable coin associated with that, usually called UST, sometimes called Terra USD. I know this sounds really complicated, but it's important for people to understand that there are a series of interlocking protocols. UST, exactly as you said, is a so-called algorithmic stablecoin. The idea here is that computer code is supposed to keep the value of that stablecoin always at $1. It has plunged dramatically over the weekend down as low as 60 cents. That may not sound like a huge loss, but it is massive for something that is supposed to stay pegged always to the dollar at 100 cents. So a 40% decline, a huge decline. The reason that this is more broadly relevant is that there's been rampant speculation that there are hedge funds, one in particular, totally uncorroborated right now, but speculation on Twitter attacking the cryptocurrency complex more broadly, particularly Bitcoin. So the question is, what should people be watching? They should be watching price. They should be watching what's happening, not just in UST, which is now trading at around 90 cents on the dollar, so having regained from its earlier lows pretty dramatically. And also, they should be watching things like Bitcoin, now trading at around $31,000, significantly, obviously, off its highs. Ethereum below 2,500, a key psychological level there, now trading at around 2,300. So people should be keeping an eye on price and looking to see if we see any contagions or broader exposure in the space.
And that's the worry, isn't it, Ash? So maybe that some of the people who support this or behind this might have to, just like you would in a regular market, liquidate the Bitcoin they hold in order to support it or support that peg. I mean, it's not that dissimilar to what we see when people have to sell their winners in order to cover a margin call, for example. So
Right.
there is some concern that this could happen. Well, what do we need to be watching, and how much are you hearing about that risk that this could spill over and create maybe more of a crisis of confidence about crypto overall?
Well, we're hearing a lot of rumors, which probably isn't surprising with how quickly we've seen these movements in price. But the reality is, I think it's important for people to understand that these algorithmic stablecoins are incredibly interesting from a technology perspective, but they are science experiments. It is extremely early. And with science experiments, when you're wading into the unknown, sometimes the test tubes explode. So this ecosystem is far less. I mean, the Terra ecosystem in general has been around since I believe 2018. So this is incredibly new technology in a field in a broad ecosystem that's generally quite new, but really early and obviously very volatile, highly experimental. People who are watching this space, and particularly people who are putting money into the space, need to understand just how experimental these technologies are, Maggie.
Yeah, that's right. And as with everything, you've got to be, sized appropriately for your risk, know what you're getting into. I know that we're going to be watching closely to see whether there is going to be any crossover, any need or any downside risk from the Bitcoin price because of this. Ash, I know you're going to be all over it. We're going to let you run because you're super busy, but appreciate it. And of course, you know where to find Ash on Twitter and as well on the crypto version of Real Vision. Just head over to the website there and you can find out a lot more about this. Appreciate you, Ash.
Thanks for having me on, Maggie.
Great. So Tommy, this is, we talked about this a lot earlier today because this is the worry, right? This is a volatile time. And when you see things like this happen, it just adds to that sense of, people sort of waiting for the next shoe to drop and being really risk averse. Were you watching what was happening in crypto today? Did that impact you at all?
Well, I don't trade crypto, but I make calls based on the technical work and sentiment work that I deploy across a lot of markets. And I will say that I did put a sell recommendation at 4,100. I've been lowering my stop all the way down. And the DeMark sequential is on day 9 of 13. And it's also moved now into the 5th and final wave lower. And the price objective that I'm looking at is around 25,000. If we get there, we get there. It could be a little bit more, a little bit less, but I'm really more focused on the countdown 13, which would be a buy signal, and probably a pretty good buy signal.
Donald from the exchange put a question in about both Bitcoin and ETH. So I hope that answered your question, Donald. But Tommy, of course, the volatility and turmoil not limited to crypto. We saw equities whipped around today, really trying to come back. And they're successful. The Nasdaq did manage to move up about 1%. It looks like it's settling on the S&P also up about a quarter, but the Dow in the red, the Russell down a third. And we saw that, interestingly, the yields on the U.S. 10-year moving lower, back below 3%. When we look at those markets, what are you seeing under the hood of this market action? Does it feel like equities are trying to find a bottom here?
I don't have every one of my indicators exactly calling a buy right now, but I did change some of my exposure today, partly because the bullish sentiment that I use is at 9% bulls. It actually broke below the February and March levels. And when you get into single digits, and I've been on this show when it was at 90 or 91 at peak levels on the opposite side, I know that it can't stay down at these levels for this extreme for that long. But I do have DeMark downside, sequential, and combo signals that are, let's say, they vary between day 9 of 13 to day 12 of 13. I like to see all those line up together. That gives me a lot of confidence to put a long position on. But I did cover some shorts today. I covered half of my SPY and Q positions. I actually covered half of my Tesla position with a 9% gain. That was nice. But I'm looking and trying to game what the market reaction with the CPI tomorrow is. And that's the thing that is the great unknown of how the market will react. So if it's a lower CPI, lower than consensus is year over year 8.1, from last month 8.5. If it goes a little lower than that, I think the market will react positively. It's not necessarily the all clear inflation has been whipped, we won, and the Fed's not going to do any more tightening. The Fed is on a path to tighten, and they haven't started the QT. So I think it'd be premature to think that it's an all clear. And now the other thing that is really starting to come in the forefront is that we're starting to see some earnings results that are a little squishy, and you're seeing a lot of sketchy, well, let's say speculative stocks that were high flyers absolutely get crushed. And I think you're going to start to see some takeover or take under activity. I think private equity is probably circling Peloton. I wouldn't get too excited about what price they're going to get for it, because I think they just need capital. So sometimes it gets to the survival place. But my view is, if we do drop, hold on, guys, I can't talk right now. Bloomberg, something's going on. If we do drop, I think that 3,700 on the S&P to maybe 3,800 those have been my target prices.
Wait, this is a foreshadowing of what's to come, Tom. His messages start blowing up. The stuff starts flying off the desk. It's like poltergeist. I'm getting worried that the spirits are trying to tell us something.
I know. Okay. But anyway.
Right when you said 3,700, something went
TV.
flying.
Anyway, I think that this has been a very typical bear market And I think the bear market will last longer and it will be more severe. But it's a bear market because nothing has worked. Everything, well, except the US dollar, has been hit. Even gold, Bitcoin, all the, safe haven, non-correlated stuff, those are highly correlated. And I'm looking at gold miners going down, uranium, people loved uranium. I still think that that's probably going lower. I put that out recently. We could get a bounce. The market is jittery and wants a bounce really bad. And that's not necessarily what you see at true bottoms. But a bounce is, if a bounce happens, I'll position for it and we'll take advantage of it. The making of the underlying internals are ripe for a bounce. Let me just preface that. We have enough that could spark a bounce. But I'm looking at call buying on the TQQQ, the triple levered psycho Qs. People were buying tons of weekly calls on that today. I got pinged on that one earlier. I was like, oh my God, people are just dying to be in this market. And
so what do they say? Explain to people when you see that happening, what does that tell you?
Well, I'd rather see really heavy call or put buying, because that says that when you see that type of activity, and there has been heavy call, or excuse me, put buying on this down move, but that's not a bearish sign. That's actually bullish, because it's just like people are shorting a stock. You could have a put squeeze and you get a lift that I've seen happen, 3 or 4 times this year. That it just, these things add up. And at the top, you see call buying, and it's different from some people that think that the smart money are buying calls. That's actually, when you see that heavy activity, that's the wrong thing. That's just people buying in too late.
It seems like this is from what you're saying, a very short-term market, a very, technical, people really trying to navigate day in and day out, because it's got this sort of murky, perhaps worrisome picture when you kind of pull the lens out. For the last 2 weeks, we've been running a special series trying to dig beneath the headlines and ask some of the best and brightest to walk us through, what are the risks? Are we at risk for a global recession? How is that going to impact markets or change the framework you work from? And I want to play a clip from a conversation Raul had with Dwight Anderson from Osprey Management, who looks at commodities, who's looking at the economy. Let's have a listen to that.
That world 2030 and forward that we're moving to, in terms of the efficiencies of batteries and storage and renewable energy and hydrogen, and all of those will have had time for us to learn how to make, how to scale, to invest, do that is. I also sadly really do think, like you touched on, that we're going to buy some time via a recession. Whether that recession is caused by some combination of interest rates going up quick enough, and I think we're almost faced with a very stark binary decision that I'll get to in a minute. But another aspect is, if you run out of calories, you can't have economic growth. Like, an incremental unit of economic growth requires an energy calorie. If you have no spare capacity of that, you have to create a recession. And so some combination of the retardant economic effect of materially higher energy prices and interest rates. We are worried that the Fed has waited too long in what was a semi-artificially stimulated environment to respond and react to that. At this point, you're almost faced to the choice of either a hard landing or structurally higher inflation, because a good amount of this inflation has been caused by supply shocks. Yeah. Okay. And so you can't solve that necessarily in the short term with normal rises of interest rates. You have to actually stop the economy, or that commodity price will.
And you can see that full interview and the series available on our website. Tommy, I think this is what people are struggling with. Like, it feels like the market wants to move higher or bounce, but then we've got this picture of so many people who are kind of saying, listen, a hard landing looks inevitable. I mean, the risk of global recession or, something of that magnitude is not looking good. Look at bonds. That's what it's telling us. How are you thinking about that and commodities against the backdrop of that?
Right. I think that we will have a recession. we could be closer to a recession than many people think. Um, Regardless, even if we don't go into a technical recession, which I think we will, we went up such a steep climb with the economy, with the equity markets. I think that there is a, you know, reckoning that will happen, and I do think that you're going to see um, unemployment start to tick up. I had actually I track. I'll put this on Twitter, but I track with the DeMark indicators the unemployment rate, and I also track the CPI. And the unemployment rate just gave a buy signal. So, in other words, I think you're going to start to see the unemployment rate go up. Now, keep in mind, it's a monthly chart, so it will take time, but it's been spot on many, many times. And the CPI also has almost a peak exhaustion signal as well. It's kind of crazy, but yeah, I think we're going to see a recession. Unfortunately, I think you're going to start to see the layoffs that typically come. I, you know, it's a bear market, and people have to be prepared and be cautious.
Yeah. Let's get to some questions. We have some great ones coming in. Achilles on the exchange. Tom, do you think oil and gas producers still have some upside in 2022, or are they topped out?
I I basically was looking at OIH, the oil service ETF, and it had an exhaustion 13 signal on the exact high. I did short it back then, and I covered it like within 4 days because it went down really, really fast. But now it's making a lower low. And I think that with crude at 100, I think crude could go a little bit lower. And the part of the reason is I think that there's the China shutdown, I think, has taken a lot of crude off the market. And that, we've had a supply demand issue. I think that you could see crude move lower. I do have a DeMark downside signal countdown going lower, and look, you can have all bets are off, as I've said, with commodities if something more serious happens with Russia and Ukraine or any other type of geopolitical issue. But for right now, I think these are going to go lower before they go higher.
El Mathiasen on the exchange has a great question. Given the impact to pension plans and the continuing negative stock market trend at a critical time in baby boomer retirement, could we see Fed intervention to prevent voter fallout? Jared and I talked about this yesterday. Jared Dillian, do you see the switch from, or what everyone's trying to figure out, what's the switch that moves the political pressure from inflation to, oh my God, there's wealth destruction everywhere? You and I talked before about retail investors.
I think the Fed's mandate is to control inflation, and I believe that they will ignore the stock market and financial conditions. There's a bunch of factors that go into financial conditions, and one of them is the stock market. And I think the Fed put, as they say, is somewhere between 3,500 and 3,600, and that maybe 3,700 if things really start to feel bad and there's some deeper economic stuff. But that's kind of where I'm at right now. I don't think the Fed's really watching the equity market like they did to try and keep things moving in forward progress.
Bo from the RV side asked another great question. To that point, is it about the level or is it the speed of the drop? Like if we get there in an orderly fashion, it feels different than if we're legging it down 1,000 points at a time on the Dow and 3%, 4% every day on the Nasdaq.
Well, anytime there's a significant rate of change, and it can be either in the bond market, equity market, you're going to see things break, and the Fed could certainly come in and do something. If we had a 1987 type crash, something where the financial markets, the capital markets froze up, I could definitely see them coming in. If it's something very sharp and fast and felt very out of control, I could see them at least saying something. And that's all it really took in December of 18 Powell to pivot, and the markets went right back up.
What would you make? There was an article out today about, speaking about things breaking, about a hedge fund, Tiger Global, losing 17 billion during the technology sell-off. I mean, people have been, even the best professionals trying to pick a bottom, trying to get in, trying to get ahead of a turn, and they've been wrong. Do you worry we could see a firm or fund blow up? I mean, you talked about the M&A and companies in distress. I mean, how bad could this get, Tommy?
It can get really bad. And Tiger Global, great firm. I had an ex-partner that was there. He was a rainmaker there, and he left in 2019. A pretty good exit, if you ask me. But they're under real pressure, and so is SoftBank. And a lot of these hedge funds and investment firms, they have a lot of private assets, and they're going to have to mark those down significantly. And a lot of the exit strategies for them to go public or merge with another company, that's starting to unwind as well. One thing, Interactive Corp, which is Barry Diller's company, and they invest in a lot of different startup type tech companies. They came out and said last night they're expecting tech valuations to decline even more, and they were thinking the private valuations, and they actually want that because they want to buy more companies at a significant lower price than where we are right now. So I think hedge funds are going to blow up. I think there's a lot of them in distress. I think there's also mutual funds that are in distress as well. I don't understand how people keep giving the time to Cathie Wood or adding, more money, giving her more money. The amount of churning within her portfolio and the losses that they've had, it's just incredible. And another thing, I don't understand why the media puts her on like she's got new ideas that could work. I've never seen anything in my life where someone that's down 75% gets such attention. It just makes no sense. And you know what? I've said this before. If she came on and said, look, I really screwed this one up, and I'm sorry, and we're going to reset and move forward from here with lower expectations, rather than her tout this, I'm going to go up sixfold in the next 2 years or whatever she's talked about. It's just so unrealistic, and investors have lost a ton of money. So yeah, I do see hedge funds, I do see mutual funds, and probably a lot of other investment firms. I mean, you could see, if things got real ugly, a brokerage firm, Robinhood, that's always a risk.
I know, and I know you've been watching this, and they have survived, but again, this is a long time to go in these kinds of markets before things catch up with you. So, I guess that means you're not buying ARK here, Tommy, which some people have been
No,
asking.
but I will say this: it did get DeMark buy countdown 13 today, and I don't want to buy it because the last two of them failed. They had very short-term little bounces, and then the trend kept moving this down. So one of the things with the DeMark indicators is when they fail, it's telling you something in itself that the trend is exceptionally strong. So I don't want to buy a basket of unprofitable companies that are in distress, that are down significantly, and you have a lot of people on top of you that would love to get out at a little higher price. So I don't necessarily need to take that risk, and I don't think people should either. It's just, remember, there's a guy or gal above you that bought it 2 days ago that would like to get out, and you just, there's a lot of supply up there. So
That's really important point. So ARK not on your long idea list,
it
but Paul,
could go up. It could go up. I think also that Tesla looks at risk. It's starting to break down, and that's been their big stock, their largest position. And if that one gives way, I mean, Elon Musk is becoming a little bit more, well, he's always been a bit unhinged, but he is really, taking it up a couple levels, and very concerning type of tweets that he's been putting out recently about himself, and if he suddenly died or something. This man is the richest man in the world and runs a $1 trillion company.
Well, he just bought another one.
Well, we'll see. We'll see. I'm not quite sure
to.
that Twitter's going to go through.
Oh,
And
really?
he's buying it with margin. He's margining his Tesla stock to buy another asset. And there's been blowups, and some of the best short ideas have been when there's a CEO that's levered to the gills and they have a margin call. And I've seen it. WorldCom was a great one. I think Valiant Pharma was another one. And it just makes no sense that he's levering himself up like this. He's always been levered, but now he's buying a big asset that really doesn't make a lot of money. I mean, it's the fact.
I'm sure you're going to get a lot of fan mail on that, Tommy. So you're brave to speak your truth, and we appreciate that. So Paul English is asking, what are some of the long ideas on your watch list?
Okay, what I tend to tell people when markets get to oversold levels and really beat up like this, it's a time where you can upgrade the quality of your portfolio. And oftentimes the garbage stuff will go up faster. But my risk tolerance, I'd rather buy, and I'm not thinking that maybe the bottom is completely in, but I bought some Amazon today, and I bought Apple, I bought some Adobe, Nvidia. The thing that happens is the standard operating procedure is that people will buy FANG stocks. And all my FANG custom indices right there were up about 90 basis points to Apple and Microsoft combined were up 1.7%. So they go towards those, and those are going to be the ones that move the market. So I don't feel necessarily great and comfortable about this whole market, but I'd rather buy that than some of the stuff that has been really beat to a pulp. So these are just trades. I'm not putting anything out there, and if they don't work, I'll certainly be gone. Small size in this market as well.
Yeah, which is important, and you've been saying that all along, and I think really important for people to remember. Griff asking about tech, which I think we just got an answer on some of the names you're looking at, and also Planeteer, PLTR.
Yeah, I bought that one on
Palantir, I think, actually.
Yeah, it's kind of a interesting company. I bought that on one of the dips, I think in March or February, like $10, and I thought this could squeeze a little bit further, and it didn't, and I sold it. I think I sold it out, and I made 10% on it, and I'm a trader. I move on, and look, it's been beat down even more, and I'm not back into buying it yet. I think there's a lot of distress in the near term of people that need to get out. If they bought it last week and it's down significantly, people are going to be, there's a lot of supply to sell to clear.
And you've said that a couple of times. I think it's really important for people to sort of really pay attention to that. It's not just the fundamentals of the company, which you may like, it may fit into a narrative that you agree with, but it's also the hands that are holding it, right? If people are looking to get out, or if there's a sense that people are stuck or looking for it to be quick, you really do have to pay attention. What about overextended stocks like Costco, P&G that are not tech? We haven't really talked about stuff that's not tech right now. How you
I
feel
look at
about
a
that?
lot of consumer stuff as well. And I was short Costco. I got out of it a little early, but I was short around 600 and got out again too early. If that's my big mistake, take profits too early. It happens. But yeah, I was kind of looking at some of the like Lulu was starting to move today. Costco at 500, I still think is a little stretched and could still go down a little bit more. Home Depot, I've tried to trade that one. It's tricky. It's not. It usually does well in the spring with the new turnover in housing.
What
But
about
it's a
Disney?
slower time.
Alexander asking about
I
Disney.
like Disney. I like Disney, and I like Disney, and I like travel related things. I've been trading really well the airline stocks. I bought them when the prices in, I think it was February, the crude prices went up and jet fuel prices went up, and those got hit 30%. So I thought, okay, I know what's going to happen because we're going to see a big, push to fly again. Business flyers were I started to get checks that the business class was back, and I was flying a lot as well. And I talked to a lot of people, and they said it's crazy. They're so busy. And then the CEOs of every airline said the demand is off the charts right now. And so I bought those. I bought some more of those. I bought more exposure there. But with Disney, I like it because I think that it's been beat down unfairly due to due to streaming. And streaming is not that big and significant for Disney. I think they're managing it well in this environment, but the stock has been murdered. I'm long the stock, I'm not profitable in the stock at this point. I'm planning on buying more. I thought about it today. That also has a DeMarc 13 coming. Oh, it has today. So we have that today on my screen. So I want to see a little bit of movement up, but the parks are going to be crowded. If people are traveling again, the Disney parks will be packed. And that, I think, will be a bigger, significant issue or positive catalyst for the stock.
Well, we're out of time. I'm going to sneak one more in, Tommy. And so we're heading into CPI number tomorrow. Sort of what's your advice to investors? Because you do get the sense that everyone's always afraid to miss a bounce or be left out. What's your advice to everyone kind of heading into that? It's going to be a big number.
Well, it's too late now to adjust your portfolios, but unless you're trading, pre-market tomorrow. The bottom line is, I think it's just, I've said this over and over, 2022 is a tactical market. You need to be very nimble, move around, be long, be short, and have cash when there's a little bit more uncertainty. And so you build up more cash going down. I think it's important just to see the reaction of how the market's going to take it. Because look, the last week, Steve Leisman of CNBC asked a very sort of dumb question. Are you going to raise 75 basis points? And Powell said no. And the market perceived that as, wow, this is a great opportunity to buy for one day. So maybe the CPI will bounce for a day or two. I'm not sure. But I will say this. I'll leave you on this. I'm taking a couple days off late in this week. I have to travel for something that's very cool. But we might see the S&P and the NASDAQ get the DeMarc buy countdown 13 on Friday the 13th, which would be, for me, that's, a reason to celebrate.
Right. Well, in addition to all the other
Right.
celebrating, we know you're going to be doing, Tommy. So have a fantastic time. And we know you'll be watching the markets. And we'll catch up with you on the other side of it. Thank you so much as always. And thanks to all of you once again for all the great questions. We're going to be back all over that inflation data and back with Darius Dale of 42 Macro tomorrow. And don't forget to check out Raoul Pal's new podcast. It drops today. Here's a little taste of what you can expect.
Yeah, I was DJing somewhere, woke up, and boom, I was in the metaverse. I didn't know what happened.
I think the coolest thing about NFTs is that for creators like me, for writers, and I'm sure, across the spectrum of creativity, artists, photographers, or whatever, can have a community of people who are invested in it, who are with you on this ride, and now have access to you, and you have access to them. And that's just, to me, it's revolutionary.
Regulation has stymied the development or the adoption of digital assets by some of these large-scale financial institutions. Boston Consultant Group has a great stat on this. From 2009 to 2016, European and North American banks were collectively fined $321 billion by regulators. I mean, just an eye-watering number.
I had lived through the financial crisis and predicted it. I had also lived through the European crisis and predicted it, and had been in Europe and had to buy a generator and food and get cash out of the bank and keep it at home, right? That's how close we were in Spain to losing our entire banking system.